If you like to trade either futures markets or major index markets, things like the S&P, the Qs, the Dow, then you'll find today's video especially useful. We're going to spend some time reviewing the volatility inside of the four major index markets. That includes the S&P 500, the Dow, the Nasdaq, and the Russell 2000. Now we'll look at all four of these markets through the lens of our futures volatility box, but for those of you that prefer trading with equity options, I'll leave some videos in the description box which give you an idea of how to trade these same moves with things like say SPY or SPX options. Now let's start first by reviewing the morning volatility note that we sent out to all of our members this morning. The morning volatility note looks something like this, and it's something we send out to our futures volatility box members with the volatility landscape of the day. We send this out about an hour after the market opens, so around 7:30 a.m. Pacific, and we use the volatility up until that point to make some predictions around what we expect to happen as the day progresses. Now this was today's note. You'll notice we have our 10 futures markets inside of our bullet points here, and each market next to it has a model around it. So for example, the S&P, the Nasdaq, the Russell were on their conservative volatility box model. The Dow was on its aggressive. Now, if you're new to our channel, you may be wondering, what do all of these terms mean? What are different models? So let me give you an idea of that visualized. You can see first down here the ranking of our models. We have 5 in total, and think of this as going from most aggressive to most conservative here. And another way to view this, which I think is a little clearer, is using a line chart. Now laid across the board here, we start with our scalper models every single day in the morning for all 10 major futures markets. We're trying to determine, hey, is the scalper doing a good job of containing volatility? Now this is usually true when we have very little volatility inside of the markets. It suggests that, hey, scalp opportunities are completely fair game. Now if say on the other hand, you're on the doomsday conservative models, and that's a very clear sign that, hey, there's a great deal of volatility in the markets. You want to be a little bit more cautious today. We're starting with our doomsday conservative models. And this doesn't happen too often, just to be clear. Now today in particular, we noticed something that was different from what we've seen at least for the past couple weeks. And that's the S&P, the Nasdaq, and the Russell. Let's actually focus on just the indices. So these 3 of the index markets were all on their conservative volatility box. So here we had the ES, the NQ, and the Russell Futures. Now the Dow was all the way down here on the aggressive volatility box models. So you can already see the dichotomy here. If you're a little bit more of a scalper in terms of you like to get in and out quickly, you're probably looking at trades inside of the Dow. If you like a little bit more of the conservative entries, you want to make sure you minimize the amount of losses, but you don't mind increasing your risk, then these 3 markets were the winners today. The interesting part was the Dow, as the day progressed, caught up to the 3 other major index markets, and we'll take a look at that when we go to our charts. But for now, the key point I want to drive home, we have 5 different volatility box models. This allows you to adapt to whatever volatility the market's throwing at you. And in today's case, the S&P, Nasdaq, and Russell were on their conservative models compared to the Dow, which had less volatility in comparison, down on its aggressive models. Now let's take a look at this inside of our Thinkorswim charts, and that should help bring things together, and we'll review the different trade setups from today. Now we'll start with a chart of the S&P 500. I have the ES futures loaded on here, and we're on the conservative volatility box models, which is what we were using to start off at 7:30ish. Now, the first thing you should notice is the sell-off that took place in that 7 to 8 a.m. Pacific hour. This is where the first volatility box breach across all of our major index markets took place. We had price action hit our volatility box zones. In the case of the S&P, the Nasdaq, the Russell, that was the conservative volatility box. And we see here how price reacts once we tag these cyan entry lines. In the case of the S&P 500, before we got our oversold confirmation signal, we had already broken outside of the box here. We can see that with this wick. Anytime we break outside of our volatility box models before we see this overbought or oversold confirmation for the short side, that's our sign that, hey, the conservative box is not doing a good job any longer of containing volatility here inside of the S&P, we need to adapt to what the new volatility looks like. The market is fluid, and thus our models also need to be fluid with it. So here, if we switch to the doomsday conservative models, the next ones we have available in the last set, there we can see the S&P bounces into our sign entry line. We then get 1 and 2 oversold confirmation signals, and the S&P reverses from there in what, if we zoom out, would be considered something like a bear flag in the middle of this downtrend where we had our next leg lower. Now inside of the S&P, we still hit the first target, but that first target was hit before we even got an opportunity to enter at the sign line. Price hit our sign line right here. Our risk on this trade about 12 point, let's call it 25 points to give it that extra tick. And we already hit that 12.25 in this move up before we even got a retest of our sign line. So the S&P 500, while we did have our target hit, never gave us an opportunity to enter. If we contrast that, however, with say something like the Dow, you should notice a much different story. Now inside of the Dow, we started on the aggressive volatility box models, and that in that same hour we can see here price breaks outside of our clouds, and we need to adapt well before we saw our oversold confirmation. So we go from our aggressive to next the doomsday aggressive models. We load that in. Still, price went outside of the doomsday aggressive models even before we saw this edge signal confirmation. We adapt one more time. Now we've caught up to the volatility of the S&P, Nasdaq, and Russell. We're on the conservative volatility box, and here we're seeing price is being contained inside of our volatility models. We have price action breach our sign entry line. That's step 1. We're then waiting for the oversold confirmation. That's step 2. And we do get an opportunity to enter at the sign line. Our risk on this particular trade is about 80 points. We make that same 80 points in the opposite direction, go a little bit further as well. So we hit T1, but we fall well short of target 2, which is this gray target line on the opposite side. If the Dow did make that move, that would have been a real nice winner, at that point risking 0 for about 340 points, but that did not happen. So T1 inside of the Dow was good for 80 Dow points, depending on if you used the full size or the micro, the actual P&L number changes there, or even if you use something like DIA options. Now this wasn't the only setup inside of the Dow. The very next hour, 8 to 9 a.m. Pacific, we get another volatility box breach, and this time you can see just how nice of an entry this was in the grand scheme of things. The market's still open, so we have about another 30 minutes left until we close, but we already have hit T2 on this trade inside of the Dow, and this was essentially the nicest winner that we had today. Let's go through this setup in a little bit more detail as well. Step 1, we have price action hit our sign entry line when it tags the bottom end of our volatility box zone. So that's step 1. Step 2, we're waiting for our oversold confirmation. That's this green arrow right here. At that point, both of our conditions for the fade setup have been met, and we're just looking for an opportunity to enter this trade at the sign line or better. Now in today's case, we got that opportunity with that wick. The risk on the second trade was about 100 points, and we were looking for that same 100 points for our first target, which we hit in this move up right here. At this point, we move our stop on any remaining contracts to break even, so that's now protecting at the sign line or a little bit above it if you want to add a little bit of buffer there. And the second target is this gray target line, which was hit in this big green candle right here. That second target inside of the Dow was about 235 points, and that was the nice winner for the day, essentially since that came from a $0 risk, having moved our stop now to break even. For those of you that did trail your stops up, you got an opportunity to ride this a little bit higher than even T2, but target 2 is where the models end for us with regards to our fade setup. So far we've discussed the S&P 500 where we had no trade opportunities, and we've taken a look at the DOW Futures where we did get 2 different sets of opportunities here, 1 and 2. Now we move on to our third index market, which are the Nasdaq Futures. Here on the Nasdaq Futures, we start with the conservative volatility box as well. Same exact time, same exact setup here. Price action one more time, breaches outside of our volatility box before we get our edge signal confirmations. That's then our sign that, hey, the conservative is no longer doing a good job of containing volatility. We need to adapt, switch to the doomsday conservative models. And once we load in the doomsday conservative models, this setup should be very familiar, very similar to the Dow as well here. We have price action breach our sign entry line. We get the edge signal confirmation once and twice. We get plenty of opportunities to enter at the sign line, or even a little bit better here. Our risk on this particular trade is about 45 points, giving a little bit of buffer here. And we make that same 45 points on the opposite side go all the way up to about 80 before price action reverses and takes out the second batch of contracts at break even. So this was the Nasdaq here, where price action then reversed, and then we started to continue, but we didn't get the same second breach as what we saw inside of the Dow. So one more time, a recap up until this point, we've covered the S&P, the Dow, and the Nasdaq Futures. Out of these three markets, the S&P is the only one that has not given us an opportunity today. Now the last market we'll take a look at is the Russell Futures. One more time, I'll load in the conservative models, which is where we started. And with the conservative box here, we have price action breach our sign entry line. That's step one. We then get 1 and 2 edge signal confirmations, along with opportunities to enter at the sign line or better. Our risk on this particular trade inside of the Russell is about 6 points, and we're looking for that same 6 points in the opposite direction. We make a max move of about 10 before price action then reverses and takes out the remaining batch at break even here at the sign line. So one more time, as a quick recap here, we have 5 different volatility box models, and they allow us to gauge what the volatility landscape looks like. To start off the morning, we had the Dow on the aggressive, which we saw caught up to the S&P, the Nasdaq, and the Russell in that same hour, the 7 to 8 a.m. Pacific hour. Out of these 3 markets here, we had trades inside of the Nasdaq and the Russell, and in the Dow, we had 2 different trade opportunities, and that was especially interesting given that we had started with a little bit less volatility here. I hope you found today's video to be useful, especially for those of you that are looking to learn a little bit more around how to use the futures volatility box effectively and what the different trades look like inside of the index markets. If you're interested to learn more, you can do so on our website, tosindicators.com/volatility-box/futures. Take care, everyone. Good luck trading, and I'll see you in the next update.